Inflation is a hidden tax, basically. They're lying to us about our tax rate because they're stealing from us in a way that doesn't show up in the official marginal tax rate. And they got away with that until very recently by not including things like stocks, bonds, and real estate, which go way up in inflationary times, in the consumer price index. So they could say, oh, look, your inflation is only 2% a year. Meanwhile, house prices were going up 8% a year, stocks were going up 15% a year. Bonds were rocking too. We had this massive long bond bull market that just ended lately. And that allowed the government to lie by omission, basically, and
in today's market recap, Wall Street throws in the towel on gold after Friday's rout. Main Street optimism likely a pre-selloff snapshot. This week, precious metals markets saved all their drama for the grand finale. Spot gold opened the week trading at and spent much of the first 4 days trading in a relatively narrow $25 range. The expected 25 basis point rate cuts from the ECB and the Bank of Canada came and went, with spot gold eventually setting its weekly high just after midnight on Friday. North American traders went to bed Thursday night expecting Friday morning's non-farm payrolls, NFP, report to be the week's highlight for gold. But the People's Bank of China, PBOC, stole the spotlight in the early hours, announcing at 4 a.m. EDT that they had broken their 18-month streak of sovereign gold purchases in May and sending metals prices crashing through multiple levels of support as algorithmic stop-loss orders were filled in rapid succession. Spot gold sank like a stone, with much of the move taking place in a matter of minutes. Then the yellow metal was in the moments before the 8:30 a.m. release of the surprisingly strong U.S. jobs report, which drove gold down even further as markets recognized that the Fed would have even less reason to cut in the near term. As gold was already down over $40 at that point, the NFP took the yellow metal all the way down to support. Now we'll show you the best clips, but first smash the subscribe button and turn on notifications so you do not miss out our daily recaps. Enjoy the episode.
Converting their currency into real stuff. And, silver, which you mentioned, is a great part of that story because it has basically two things going for it. One is that industrial applications are growing for silver, and the demand for silver in solar panels and satellites and electric cars, and it goes on, is rising at an accelerating rate. And right now, silver is in deficit, meaning that the world's silver mines aren't producing enough silver to cover what industrial users and investors are demanding right now. So we're running through the above ground stocks of silver. And when that runs out, then you go from deficit to shortage, which usually means prices have to go up to increase the supply somehow. And an analyst just came out lately with a time frame for that, and he said 1.5 to 2 years before we run out of above ground silver, and the price mechanism has to really kick in order to allocate what there is out there. And India, for instance, is a good example of the response to that because they just imported more silver in the first quarter of this year than in all of 2023. And they're normally a big importer of silver, so that we're talking serious numbers in that case. And they, at the same time, repatriated 100 tons of gold from London back to India. So take what India is doing and kind of spread it out around the world, and you've got different entities, whether they're countries or companies or individuals, doing variations of that. They're buying silver coins, or they're stockpiling gold because they see a currency crisis coming, or they're buying every bit of copper they can get their hands on, because if we're going to electrify the world, it's going to take 3 times as much copper as comes out of today's copper mines. And then what are we going to do then? And so everybody has their reasons, but it all involves a thought process in which they conclude that the currency that they have is worth less than the commodities they could buy with that currency. And, you reach a point where it dawns on everybody that we're literally running out of this stuff, which is another way of saying we've got tons of currency relative to the amount of commodities that there are out there. And we really need to convert all the currency that we have into these commodities, if it's at all possible. And so that, within the framework of the crack up boom, that means the price of real things goes through the roof, but not because there's a huge increase in the supply of currency. It's not inflation as we typically envision it. It's a loss of faith in the amount of currency or the currency that exists now. And so nobody just wants to hold those currencies anymore. So that's a conceptual difference that works out to the same thing, which is that the price of real stuff goes through the roof. And the market value of financial things like government bonds and bank stocks and, Goldman Sachs equities and things like that tank. And you get a revaluation in both directions where commodities relative to the size of the global economy, they go up, while financial assets relative to the size of the economy go way back down. There's a cycle in the gold market where the S&P 500 and gold's market cap fluctuate against each other. And, sometimes they're trading at 1-to-1, and other times they're trading at this massive premium of the S&P 500 over gold. And lately we've been in a situation where the S&P 500 was vastly more valuable than the market cap of gold, but we're heading back in the other direction now. And if we go back the way previous cycles have gone to 1-to-1, then that takes the price of gold to $15,000 or $20,000 an ounce. So that's one metric that you can look at that's fundamental, that gives you a reasonable way of estimating the value of gold. And it could easily do that because it's done that a couple of times in modern history already. So it's not unprecedented. It's just something that happens when the cycle swings all the way to the other side. And it wouldn't be a surprise at all to see that happen again this time, because all the other numbers are so far out of whack that we should expect the pendulum to be swinging really wildly for the next decade or two.
In today's market recap, MKS PAMP Group expands silver production capabilities to North America. PAMP Group, a leading precious metals group, is expanding its silver production capabilities to address the growing demand for silver-minted products across North America. Based in Hollywood, Florida, the Mint, previously an aviation hangar with a surface area of 26,000 SQFT, has been repurposed into a facility capable of reaching an initial production volume of over 20 million ounces yearly, with capacity for expansion. Initially launching with the Buffalo and PAMP Silver rounds, PAMP Silver products produced in the USA bear the iconic PAMP hallmark, registered by the Swiss Federal Bureau, and feature a discrete USA Mint mark. As highlighted in our recent World Silver Survey, and for the third in a row now, silver demand greatly exceeded supply in 2023. Now we'll show you the best clips of the interview, but first, smash the subscribe button so you do not miss out our daily recaps. Enjoy the episode.
So it served two purposes. One is that it made the guys financing political campaigns even richer and really happy because of that, and more likely to continue to funnel money into the political system. And it hid the damage that was being done from people. And so the people who were being hurt by this process didn't really have anything to say about it because they didn't know what was going on. Just lately, though, inflation started to spread from financial assets to the assets that are measured in the consumer price index. All of a sudden, food went way up, and car prices went through the roof, and rents went just crazy lately, and along with college tuition and medical bills and all the stuff that form part of the cost of living for most people. And so that changed everything. In 2022, we had like 8.75% official inflation and probably 15 or so percent real inflation in the cost of living, in the CPI. And so now, the whole country is freaked out by this because so many people who were just covering when their cost of living was what it was in 2019 have seen that cost of living go up by 30 or so percent, and now they can't pay all their bills. And so you have this spectacle of politicians and economists going on CNBC or MSNBC and saying, people are just so ignorant. They don't understand how good they've got it now because inflation is back down to 3%, and the unemployment rate is this awesome low 3.5% or 4% number, and this is great. This is a really happy economy. But they're saying it to a country full of people who had their cost of living raised by a third and who can't pay for the rent and to put gas in the car and to feed their kids all at once. They have to choose which one of those things they're not going to do. So they're not happy. And so that's why our politics is so unsettled right now, because you've got this huge section of tens of millions of people in the US who just can't get by in the current system. And they're being told by politicians and economists in the mainstream media to ignore what they're seeing and trust the experts. And so basically the last 10 years has been this process of the experts screwing up in one way or another, and different groups of people figuring it out and no longer trusting the experts. And now, after the pandemic and after the Iraq war, and it just goes on, and after the weaponization of the criminal justice system just lately for political aims. So various groups of people tune into various expert failures and then see that and then stop trusting the big systems out there. And pretty much now we're at a critical mass where virtually everybody has been fooled or lied to in a way that they understand. And so they no longer trust the system. So you're getting that thing you and I've talked about called the shrinking trust horizon, where we have come to the conclusion that whether it's the public health system or the military or the political system or the mainstream media or healthcare or whatever, they can't be trusted. So we only trust people we can see and look in the eye and shake hands with. And so we buy our food from local farmers, or we grow it in gardens at home, and we tune out the mainstream media. The combined viewership of CNN, Fox, and MSNBC is plunging. The Washington Post is laying off reporters now, and the New York Times has been laying off reporters forever. And Sports Illustrated magazine basically just closed down. The bloodbath in the media is ongoing and everywhere. And the reason for that is because they turned out to be untrustworthy. So once you get to the point where nothing is trustworthy, then why would anybody trust the money that is run by these experts who are part of the big systems out there? If we can't trust healthcare and we can't trust food and we can't trust politics, then there's no reason to trust money anymore. And that's the crack-up boom that the Austrian School of Economics talks about, where we just give up having faith in the currency because we know it's going to be inflated away at an accelerating rate going forward, and we just bail on financial assets.
What do you think of today's show? Do you agree with John Rubino? Is gold and silver about to skyrocket, or will the big institutions manage to drive prices down? Post in the comments section your honest opinion and share this video with a gold bug, as more people need to know about this. Now watch this video right here because it's a perfect fit for you. I see you on the other side.